Hello, fellow traders. 'Tis I, the Rumpled One. It's Thursday, July the 11th, the year 2019. Let's talk trading. Success is not perfection, especially when it comes to trading. Personally, I hate to lose. I've always hated to lose ever since I was, even before grade school, I hated to lose. Of course, as a child, I threw temper tantrums sometimes when I lost, and I had to be taught to not do that. But, sometimes as an adult, trading, feel like throwing the laptop across the room or, yelling at the screen. It doesn't do any good. They can't hear me. But, where all that comes from is we think we have to win each and every trade. And we don't, not to be successful. And it's almost a ludicrous goal to have winning as the goal, because that's something we can't control. I know I've done a few videos talking about the things we can and can't control in trading. And the outcome of the trade is not one. Now, you know where this is leading, don't you? When it comes to trading, when we work on our risk, we can control how much we risk per trade, and barring unforeseen circumstances, that's the most we'll lose. We can control what method we choose. That's well within our control. And we can pretty much control our execution and our performance. In other words, are we there on time? Do we only take the trades according to our method? We can go for perfect execution on our part, but it's just the outcome we can't do. We can't do the outcome of a trade, no control over it except on the downside. And once again, the amount we're willing to lose per trade. That's what we can control. That's where we can have success. So if you define success in trading as we never lost more than we were willing to lose on any trade, all of our trades. We look at all of our losers and none of them exceed our risk. Hey, that's something to strive for. Question is, how many of you can say that that's what you've done? So as you're trading, I want you to keep that in mind. Otherwise, you might wind up really frustrated. Okay, let's look and see what we've got going here. Those of you just tuning in, for the week, you're kind of late because all the gaps have filled. All those weekly gaps have filled. We can see here, just looking at the chart, we started the week off inside the lower wick zone. We exited that lower wick zone in the previous week's candle, and we hit right there the midpoint. Imagine that. We got just to the midpoint, a high of 122.31, and the mid was 122.32, within 1 pip. And then it pulled back. So once again, that shows that power of the midpoint. And why, one of the reasons why I like using that midpoint. Now here's something interesting. We had the pivot above the buy zone by just a couple of pips, giving us a weak bias up, but taking that trade right there, you put a couple pips in your pocket. Here, then we hit the pivot, came back the other way. A short signal right there, beginning of the Asian session, and then it almost touched the weekly open. See, that was the low right there. So we had a low, that shows the hours. Where did we have a low? We had a low of 0.617, had to switch charts there. So we missed it by 2 points. But that would have been a nice place to take profit. And then we came back. Oh, somebody asked me about the VWAP. I think they sent an email. The volume weighted average price. Why do I even have it on the chart? Because number one, it's truly a squiggly, but I just have the current value. Um, I use it as a place where price will tend to return to. So when price gets far and far away, it's a place where if if price is moving towards it, like in this case, if I was short, I might wait for price to hit here before I either exit the trade completely or partially. So if I was, say, price went here, didn't quite get to the buy zone, I saw it come back, failed to make a higher high. Let's just say I went short. You see, it went right through the short zone here, but I shorted at the open, hit the VWAP. That'd be a place where I might go, you know what? I might just take profit. Because you see here, it was making higher lows. So that's a great place to take profit. Of course, you can call it hindsight, but that's how I use it. Looking at the daily chart, the range, no pairs over 100. I guess after FOMC, maybe traders were tired, maybe they're exhausted, maybe they got tapped out. I don't know. But we broke through the previous day's low. And let's see, it looks like that was about a 33 pip trade if you nailed that low. But once again, just using these simple horizontal lines, trading in the direction of the daily candle in this case, yielded a nice profit. But remember, traders, boys and girls out there, these videos are for educational purposes only. So your results may differ from mine, and Forex trading is very risky. Ooh. It's hard for me to say this stuff with a straight face. So if you're interested in Forex trading, you might, or any investing, you might want to seek the help and guidance and wisdom, tongue-in-cheek there, of an accredited professional financial advisor. Okay, you can see here we got a little trigger there, not much, a little trigger there, not much, but looking back, you can see it's just kind of just churning here, just moving about a couple of spread, so price really doesn't know what it wants to do at the moment. Looking at the range here, daily range, right now we got 48 pips, or 71% of average. Oh, for those of you who wanted to know, this is kind of a hodgepodge of a screen or a chart. I just have different range gauges that I've written. Got the frequency distribution here, and then the range. Price action. Simple stuff. Once again, we just have the sweet spots gold indicator that I modified, showing spacing every 10 pips. And we know from observation that usually if price starts between two lines, it's going to exit one or more of those lines because of the average range of 1 hour is right around 10 pips. In fact, now we can switch this back over to the hour. So you can see between 0 and 9, average range 9.79. So you see 38% of the time it's 10 or more. You could probably on the hour get this down to say 1 to 0 to 5, 5 to 9. But what you just have to realize is that usually, because where price starts, it doesn't usually start right on the line, just because of the physics of it. It's going to move across at least one of those lines, sometimes by a little and sometimes by a lot. You can see here. But it started here, came all the way down here. I mean, it's just those things. You can just take those trades right at the line, and sometimes you'll win, sometimes you'll lose. But that's trading. But that's why you have your stop loss in place and your risk management. Now, I don't know why I had that on the CAD. I think I must have been showing something yesterday, if I remember correctly. But that was just simple trade, and for some reason I put it on M1. Don't remember what the reason was today. But you can see here, once again, looking at the wick zones, the upper and the lower, how price went right through them. Oh, and I was telling you about the swap rates here. As you can see, you probably don't want to hold this overnight unless you want to pay the swap. It's, it's piddly amounts, or it can be a lot depending on the size of your position. But you can see here, we almost hit the mid dot. Oh, I know what I didn't show today because I'm using a different profile for this video. I've got about 3 or 4 different profiles that I use for videos, and we usually look at the pivots. So let's just turn those pivots on, show pivot true. And you can see here, there was a daily pivot. And 122.08 9 122.09, so it looks like it hit the pivot, and I think we showed that back here. So that about wraps it up, fellow traders. Just remember, when you're trading, it's not about the outcome of the trade, it's really about what you did. In other words, it's not what you trade, it's how you trade it. So go out there and drain the banks.